After Detroit's bankruptcy last week, there are lots of questions about which city could be next.
Moody's Investment Services is now reviewing Minneapolis's bond rating based upon its past pension debt. But how serious is the threat? Here's Fox 9's Tim Blotz.
In many respects, Detroit could not be more unlike Minneapolis. Detroit is a Rust Belt city in decay that is yet to recover from the recession. Unemployment remains at a staggering 16%. In contrast, Minneapolis, with a diverse industry mix, now boasts one of the lowest unemployment rates at just 4.7%. But more than ever, a city's long-term financial health is measured by its pension health. Detroit just filed for bankruptcy based in good measure on its pension debt of more than $3.5 billion. Minneapolis has pension debt too. According to the Pew Charitable Trust, the city's last known pension debt at the peak of the recession was $706 million. That has led Moody's Investment to place Minneapolis on a review list of 29 cities and school districts across the country. But it's one of only 6 cities on that list to have Moody's top AAA rating. While Moody's today says it's still reviewing Minneapolis, the verdict is already in on Chicago. Moody's dropped its credit score 3 notches last week to A3 status, based largely on what Moody's says is the city's $36 billion pension debt. Financial analyst Mike Rogers says Minneapolis is on much more stable ground.
Here we have this diversified economy. The city's pretty well managed. I know some people might argue that, but it's well managed. The property tax base is high. Again, maybe some people argue it's too much. Economically, we're in much better shape because of the diversification of the manufacturing and the services and the med tech business that we have here.
Now, we also need to point out that Detroit's bond rating prior to bankruptcy was Caa2, and basically, that's junk bond status. Minneapolis, on the other hand, has the highest possible rating at AAA, obviously a long, long ways from where Detroit is at. Additionally, 2 years ago, the city merged 3 of its pensions with the state pension fund, and a City Hall spokesman today says that alone saved Minneapolis taxpayers $20 million last year. The bottom line is, Minneapolis is so not Detroit. I'm Tim Blotz, Fox 9 News.